global tensions, political risk increases, global money moves quickly. Historically, capital follows three rules: move from high-risk regions, enter politically stable economies, focus on income-generating assets. Real estate behaves differently from stocks. Prices may not crash immediately. Instead, the first impact appears in buyer sentiment, transaction volume, luxury demand, foreign investment flow. This is why understanding investor psychology is critical during global uncertainty.
The UAE has built its reputation over the past 2 decades as a global safe haven real estate market. During previous crises, 2019 Iran-US tensions, global pandemic, Russia-Ukraine war, Dubai actually experienced increased capital inflow, especially in luxury and branded residences. Why investors choose UAE? US dollar-pegged currency, no property tax, high rental yields, typically 6 to 9%, strong population and business migration. However, the current situation introduces a new factor. For the first time, global investors are discussing regional security risk in relation to the UAE. Even if the direct impact is limited, perception risk can influence investment decisions. In real estate, perception often moves faster than fundamentals.
From a professional market perspective, this situation requires strategic attention. The UAE is facing this type of investor concern at a level not seen before. To maintain global confidence, authorities may need to strengthen international security coordination, review and reinforce strategic agreements with key partner nations, ensure transparent communication during geopolitical events. If investor confidence is not actively supported, there is a risk that global capital could diversify into alternative safe markets, because real estate is driven by trust, and trust drives international money.
The United States remains one of the world's largest safe haven investment destinations. In the current environment, the key factor is interest rates. If global uncertainty increases, investors move into U.S. bonds. Mortgage rates may stabilize or decline. Rental demand remains strong. Cash flow markets currently performing well include Texas, Florida, Midwest rental markets. U.S. real estate fundamentals are supported by population growth in key states, housing shortages, strong rental demand, and for income-focused investors, the U.S. continues to offer stable, long-term opportunities.
What should smart investors do now? In UAE, focus on prime locations, avoid speculative flipping, prioritize rental demand areas, work with strong developers. In US, target markets with 6 to 10% rental yield, focus on population growth regions, lock financing when rates improve. The key principle: do not invest based on headlines, invest based on cash flow and long-term demand.
Here is the situation in simple terms. Global tension increases investor fear. Money moves to safe countries. UAE and US are still strong real estate markets. UAE is facing a new perception challenge for the first time. Authorities may need stronger international coordination to maintain investor trust. US may benefit if interest rates stabilize. Most important, strong locations and rental income matter more than global headlines.
In every crisis, emotional investors wait. Data-driven investors build wealth. If you want real estate analysis based on cash flow, global capital trends, and real investor strategy, subscribe to Real Estate Cash Flow. Because smart investing is not about timing the market, it's about understanding it.